Cerebras Systems just had one of the wildest IPO debuts Wall Street has seen in years. And if you're watching this trying to figure out whether you missed it, stick with me, because we're going to break down exactly what happened, what this company actually is, and what comes next. So let's start with the business itself, because before we talk about the trading chaos, you need to understand why this thing got so hot so fast. Cerebras builds AI chips, but not regular AI chips. While every other company in this space is selling you racks of GPUs that need to work together in giant clusters just to run a single AI model, Cerebras said, forget all that. They built one chip the size of a dinner plate, literally a wafer. The entire silicon wafer is one single processor, and the result is an AI chip that runs inference tasks up to 15 times faster than leading GPU systems. On certain workloads, over 1,000 times faster. Inference is the business right now. Every time ChatGPT answers you, every AI query, every prompt running in a data center somewhere, that's inference. And Cerebras is purpose-built for exactly that. Now here's where the story gets interesting. Before this company even went public, ARM Holdings and SoftBank came knocking and tried to buy the whole thing. Cerebras said no. They had a $20 billion multi-year deal with OpenAI already signed, Amazon Web Services in the customer list, and demand for the IPO was oversubscribed more than 20 times over. When you're turning down acquisition offers and OpenAI CEO is showing up in your roadshow, you don't need to sell. You go public on your own terms. And they did exactly that. They priced at $185 a share, $25 above the top of the expected range. And Morgan Stanley, the lead underwriter, held the open. That's a classic move. You build the pressure. You let the demand cook. Institutions are sitting there with orders ready. Retail is watching the ticker refresh. And Morgan Stanley is just waiting. And then just before 1 o'clock on Thursday afternoon, they couldn't hold it anymore. The stock opened at $350, nearly double the IPO price, 18.9% above where it priced the night before. And it kept running, hitting an intraday high of $385, pushing the fully diluted market cap toward $86 billion, according to Bloomberg. For a company that was raising private money at a $23 billion valuation just a few months earlier, that's not a pop, that's a detonation. Then gravity did what gravity always does. It pulled back through the afternoon and closed Thursday at $311, still up over 68% from the IPO price, which is still an extraordinary first day by any measure. But Friday, down another 10%, closing the week at $279. So in the span of 48 hours, you went from $185 to $350 on the open, peaked at $385, then came back down to $279 to close the week. That's the IPO roller coaster playing out in real time, and it's exactly what happens when a stock gets that hot that fast. So where does that leave us now? Let's be honest about both sides. The bull case is real. Revenue last year was $510 million, up 76% year over year. And they flipped from nearly $500 million in losses to over $237 million in net income in a single year. That is not a story you see often. The technology is genuinely differentiated. The customer list is elite. OpenAI, AWS, sovereign AI programs in the Middle East. And here's a detail a lot of people are sleeping on. Both Amazon and OpenAI hold warrants to purchase Cerebras stock. These aren't just customers, they're financially aligned. On top of that, analysts are already flagging that Cerebras looks likely to be added to the S&P 500 and the NASDAQ 100, which means every index fund tracking those benchmarks will be forced to buy shares. That's a structural tailwind that has nothing to do with sentiment. But the bear case is also real, and you need to hear it. Nearly 90% of revenue comes from two customers. 2. If either of those relationships changes, a contract dispute, a strategic pivot, a competitor wins the business, the revenue story changes dramatically overnight. The valuation, even at $279, is still over 100 times last year's sales. That is pricing in absolute perfection. And then there's the lockup. Employee shares and early investor shares are locked up for 6 months post-IPO. That clock expires around November. When it does, there will be a wave of selling from insiders who've been waiting years for this moment. That's not speculation, it's math. Every IPO goes through it. The people who chased the open at $350 Thursday morning are already sitting on a 20% loss from their entry. The patient money watching and waiting at current levels. That's a completely different risk profile and a completely different conversation. Here's the real bottom line. Cerebras is not a meme. It's not hype built on nothing. The technology is legitimate, the growth is real, and the customers are the most important companies in the AI ecosystem. But it is priced like it already won, and the market is about to find out very quickly whether Cerebras can keep executing at the pace the valuation demands. Watch the 6-month lockup expiry in November. Watch whether they add a third and fourth major customer to reduce concentration risk. And watch what happens later this year when SpaceX, OpenAI, and potentially Anthropic all hit the market. Because when the next mega IPO lands, capital has to come from somewhere, and some of it will rotate out of CBRS. If you bought it, let me know at what price in the comments. If you're watching from the sidelines, smart, there will be a better entry. And if you want the full breakdown when the next major IPO drops, subscribe.